Okay, now we are on page 8, and we're going to look at the entry, and we're just going to do 2019. Using the proportionate approach to deal with accumulated depreciation. So we're recording the entry for revaluation. We're going to use the proportionate approach to deal with the accumulated depreciation. Appendix 10B has the rest of the transactions. So with the proportional method, we use the fraction of fair value over carrying value to revalue the asset and the accumulated depreciation. So instead of closing accumulated depreciation to the asset, we're going to take a little bit off both. The balance in the asset and accumulated depreciation will be different than the asset adjustment methods, but the carrying value will be identical. And the surplus, revaluation surplus, gains and losses are the same in both methods. Okay. So, December 31st, 2019, we know the fair value is 90,000. So this entry combines the adjustment to accumulated depreciation with revaluation of the asset. So you can do this any way you want, but I'm going to make a little chart. Before revaluation, after revaluation, and the increase or the decrease. So we've got a building, and we've got accumulated depreciation. So for the revaluation, because it's just the first revaluation, our building, if you look back at the question, was 100,000. And that was on page 5. Oh, maybe page 6. Hang on. Yeah, page 6. And our accumulated depreciation, just reminding you here, was 100,000 divided by 25 times 3, which was 12,000. So together, our carrying value was 88,000. Okay, and if you look here, after we close the accumulated depreciation, the carrying value was 88,000 on the building because accumulated depreciation was 0. So, you know that over here, after revaluation, what do we want the balance of the building to be, the carrying value? Well, its fair value is 90,000, so that's what we want. So, somehow, we have to convert these numbers in equal or appropriate proportions to total up to, or sum up to 90. Remember, accumulated depreciation is negative. Opposite balance, credit balance. Okay, so if I times this by the ratio of after revaluation over before, that's the fraction we're trying to change, we get 102,273. So we have to increase our building, so debit it for the difference, which is 2273. Okay, and just to remind you, that's 102,273 minus 100,000. Okay, So now we do the same thing with accumulated depreciation. 90 over 88 gives us 12273. So that means, and it's also negative, or credit, think of it as credit, we have to increase it from 12,000 to 12,273 by 273. Again, the difference. So if we sum this up, we get 2,000 and we need to debit that. Okay, because debit's minus credit, we know it's a debit. Okay, so let's piece our entry together. Debits are bigger than credits, right? Okay, so debit and credit. What do we have to do with the building? We have to increase it by 2273. And accumulated depreciation, we have to credit it by 273. Well, what are we out? A credit, and I'm just going to be sure this was a debit to the asset. Well, we're out by 2,000. And where does our 2,000 go? Revaluation surplus, OCI. Now, there's not going to be a lot of weight on this, you guys, because that net method that we did on the other page is a lot easier to use, but just understand it does exist. Now, you notice the balance after revaluation is going to be 102,273, whereas here our balance was 90. So those numbers are going to be different. But what was the balance here for accumulated depreciation? It was 0. However, here, 12,273. So when you take carrying value or book value, it turns out to be 90, just like this is. Okay? So you can try that out. You're doing 2022, look in Appendix 10B, see what you did, and that should be good. That's kind of enough coverage for that. I can't remember if I put one in Wiley just to have you do it, but yeah, not a lot of weight on that. Okay, so this was the revaluation method. You can use it for IFRS on property, plant, and equipment. You can either adjust depreciation using this proportionate approach or what I call the net method by zeroing out accumulated depreciation. Remember, ASPE can't use this. So let's just write down here. This is for IFRS on property, plant, and equipment. Or they can use cost. And this is a revaluation method. Method with either net or proportional accumulated depreciation adjustment. Okay, and then put no ASPE, just to remind you. Okay, we're going to go to page 9 now. And look at the third model, the fair value model, which you will love, and you will hope that the entirety of chapter 10 is based on this. But it won't, because it's too simple for you guys. So, only IFRS uses this, and only for investment property. So if you have an apartment building that you own and then you rent it out, this is what you'd use. Okay, or you can cost. So you can review the example details, the acquisition entry in example 1010 in the text. But basically we're purchasing investment property with a cost of $1.04 million, February 2nd, 2020. Now, once you have purchased the investment property, using the fair value model, we revalue the property each year to fair value. So it's not like the revaluation method where you're doing it in cycles. No depreciation is recognized under this method. Any gains and losses go directly into net income with a gain or a loss. Nothing goes through OCI. Because there's no depreciation, land and building can be recorded in the investment property account. Okay, so this is a very unique little situation. So record the entries to bring the investment asset to fair value if the balances at year end are as follows. Okay, so December, well, 2019, so February 2020. Oh, it's the same, we're not doing depreciation anyway. And this 1.043. So between February 2020 and December 2020, did we have a gain or a loss? It went from 1.043 million down to 1.04 million. A loss of 3,000. Take the difference. Then, from December 2020 to December 21, what happened? Loss or gain? Another loss of 12,000. And then finally, from 2021 to 2020, gain or loss? Went from 1.028 million to 1.1. We had a gain of 72,000. Everybody good with that? Okay. Entries. So, December 31st. 2020. Well, the investment property is going down, so we're going to credit it investment property for 3,000. And what am I going to debit? Loss on valuation of investment property or something, whatever it is in your chart of accounts or in Wiley. Okay, that's the first one. What do you think we have to do for the second one? December 31st, 2021. It's another loss. Is the entry going to look just like that? Yep. So the investment property is going down by 12,000, and a loss on valuation of investment property is 12,000. So, do you think you can do the last one by yourself? Hit and see if you got it right. So, December 1st, 2022, this time we have a gain. So we're going to debit investment property for 72,000 and credit gain on valuation of investment property or whatever the proper account is. So, how did you do? Easy, right? You figure out the gain and loss between the 2 years. There's no depreciation, so you don't have to close any accumulated depreciation accounts. And you just record that, and it's always at fair value. Okay? So, costs incurred after acquisition, you can and go through those examples in the text. This kind of thing you're responsible for, but you're not going to see a big problem on it. Okay? Multiple choice question or something. So make sure you look at it. Okay. As we mentioned earlier in the first half of the chapter, E1029, E102, and E1017, the solutions are online. So these are extra ones to do. Do these with the first half of the chapter, and then you can do all the rest here. Okay, that is it for chapter 10. So I hope that made sense, and yeah, get working on the questions, and if you run into problems, send me an email or come to office hours. Okay, take care.